Today's market is walking straight into a perfect clash of forces. On one side, we have extremely low volatility, a strong global rally, and a big SGX Nifty gap up. On the other side, FIIs have sold more than 2,000 crores in a single day, while DIIs stepped in with one of the largest buy figures we've seen recently. And when these forces collide at the open, the trend you see at 9:15 may not be the trend you see at 10 o'clock. This is one of those days where the market looks calm on the surface but is hiding a big move underneath. Let's begin with the global environment because that is the main driver of today's sentiment. Overnight, the US markets gave India a huge boost. The Dow Jones rallied by 646 points, which is a massive 1.34% jump and a very strong indicator of risk-on behavior. The S&P 500 also moved slightly higher, while the Nasdaq closed marginally lower because tech stocks faced some profit booking. Despite this, the overall sentiment remains positive. European markets also held strength, with the DAX and FTSE both trading in green territory. Asian markets opened mixed, where Japan's Nikkei continued to show impressive momentum, while Shanghai showed slight weakness. Globally, the S&P 500 VIX dropped to 16.15, indicating a low volatility environment that usually supports stable upward movement in equities. The key takeaway is this: the world is giving India a supportive backdrop, but the slight weakness in Nasdaq means our IT stocks may not participate aggressively. Now, the SGX Nifty is showing a very clear signal. It is trading at 26,130, which is more than 104 points higher, indicating a strong positive gap up at the open. The high of SGX Nifty is around 26,149 and the low is 25,950, which shows that the overnight sentiment is not just bullish but also stable. A plus 0.40% pre-open gain is enough to tell us that buyers are in control coming into the session. However, a gap up is only the beginning of the story. What we need to understand is whether the market sustains this strength or fades it in the first 30 minutes. Crude oil prices have moved higher, with WTI at 57.96 and Brent at 61.62. This is positive for stocks like ONGC and Oil India, but it puts pressure on sectors like aviation, paint manufacturers, and specialty chemicals. Gold and silver are trading in the red, indicating risk appetite in global markets. In currencies, the USD-INR pair is trading flat at 90.231, which is a very good sign for stability in IT earnings and FII-related flows. Now, this is where the plot thickens. FIIs sold 2,020 crores rupees in the previous session, which is a heavy outflow and usually negative for the market. But DIIs stepped in aggressively and bought 3,796 crores rupees. Such a huge difference means domestic institutions completely absorb the FII selling pressure and still push the index higher. A market that goes up even when FIIs sell heavily is a market driven by strong internal liquidity. This is exactly why we are seeing consistent buying on every dip. But the tug of war between FIIs and DIIs will create some morning volatility today. Looking at yesterday's Indian market, Nifty closed at 25,898 with a gain of 140 points. The index consistently found buying support throughout the day, especially around dips between 25,700 and 25,800. The advance decline ratio was also very healthy with 39 stocks advancing and only 11 declining, confirming that the rally was broad-based and not driven by just the large caps. Bank Nifty also performed strongly, closing at 59,209 with a gain of 249 points. It opened around 58,966, dipped briefly, and then found strong buying interest, especially as volumes crossed 969 lakh. The index touched an intraday high near 59,423, which is now becoming an important resistance zone for today. Bank Nifty is not showing weakness at any major level, which suggests that if the market decides to trend, the banks will likely lead the move. The VIX fell sharply to 10.53, dropping more than 3.5%. This is an extremely low volatility level, which often creates two types of market days: either a smooth and steady trend day or a sudden and sharp reversal when volatility begins to spike. As long as VIX stays below 11, the market will behave in a controlled manner. A sudden spike above 11 could instantly change the intraday sentiment. So VIX is something we must keep an eye on today. Bro, if you appreciate clear, logical and drama-free analysis every single morning, afternoon and evening, then make sure you subscribe to Wealth Maama right now. This channel is for traders who want clarity and confidence in their decisions, not confusion and noise. Technical levels for today. For Nifty, the first support is around 25,750 and the next support is at 25,600. On the upside, the first resistance is 25,980 and the second is 26,060. If the index breaks and sustains above 26,060, we may see a continuation rally. For Bank Nifty, the first support is at 59,050, followed by 58,800. Resistance comes in at 59,420, and above that level the index can easily build momentum toward 59,700. If Bank Nifty crosses 59,420 with volume, it can completely change the tone of the day. Sector and stock impact for today. The IT sector may open slightly weak because Nasdaq closed lower, but the stable rupee may restrict deeper cuts. Reliance Industries is likely to show strength because crude prices are supportive for its O2C business. Banks, especially HDFC Bank and ICICI Bank, look positioned for another stable day because institutional flows remain strong. PSU banks are also likely to outperform, especially SBI, given the strong domestic liquidity and a low volatility environment. Metals may consolidate because copper prices slid slightly. Adani stocks may also find positive traction due to broad market strength and low VIX. Based on all the data, a plus 104 SGX Nifty gap up, extremely low VIX, strong global cues, heavy DII buying, and stubborn FIIs selling, today's market is likely to open higher, dip slightly during the first 30 minutes, consolidate, and then choose a direction depending on Bank Nifty's ability to break above 59,420. If this level breaks, today could turn into a smooth upward trend day. If it fails, the market may slip into a range for most of the session. Before you go bro, if you feel your decisions sometimes get influenced by emotions or fear of missing out, make sure you watch the Trading Psychology playlist. It will genuinely transform the way you look at the market.